welcome back to Fast Stock Market News, where I give you all the news as fast as I can. And what else is there more? What else can you say, guys? Today was an absolutely brutal day, specifically for the Nasdaq, who had its worst day of the year so far. Who knows? It might not be the worst day of the year for long, because it's been an absolute bloodbath out there in the stock market. Most likely, if you have any kind of stocks right now, you're probably underwater with most of your holdings. And yeah, it's been pretty devastating, guys. Honestly, there's no way to cut it. So what's actually causing the sell-off today? I mean, there's a whole lot of things that are happening right now. As you can see right here, for one, the 10-year bond jumped almost to 3.1%. And it keeps climbing. But the biggest reason, and it's the reason that it was yesterday, it's an extension of the Fed. How traders are basically reassessing all the rate hikes, the inflation, and whatnot. Kind of like the market is saying in a way we saw the news yesterday. The Fed said they were going to raise 75 basis points anytime soon. They were just going to do 50-point rate hikes for the rest of the year. For the next 3 months at least, and the market was fine with that. But I think to judge how the market and the algorithms are detecting it, they think that the Fed is wrong, basically, and they're thinking the 50-point basis hike, even though it gave reassurance and guidance to the market and clarity, it's basically thinking, you know what, I think that might not be correct, and I think you're a little bit off, and they're basically not giving the Fed the benefit of the doubt anymore, saying, you know what, you've been wrong up until right now. Why should we think that your 50-point basis hike is going to actually stop inflation? So that's pretty much it. The market's basically doubting the Fed, and in a sense, it's basically pricing in the recession that the market probably believes we're already in. But as I said, guys, honestly, I'm not worried at all. I'm a long-term investor, very long-term investor. I'm not a trader. From time to time, I will trade options and swing trade. Right now, it's not really an environment for doing that unless you're someone that likes to day trade every single day, but that's not me. But I got some words here from Josh Brown, who, again, he reiterates he's actually he's kind of blaming this on the Fed overall, but he does have a word of wisdom, wise words for investors out there, and take a listen, guys.
Josh Brown, you wanted to get in before. You can get in now.
Yeah. I mean, we were, I say colloquially, like the stock market strategists, we were baffled watching the Fed continue to buy mortgage bonds month after month after month, with home prices up 20% year over year. It made no sense. What are we trying to do? Are we shooting for 25%? And in what way is that helpful for the economy to lock out first-time home buyers? Who is being aided by that activity? None of it made sense starting from last summer. You got a Nasdaq at 17,000, and the Fed is buying treasuries? What on earth is the purpose of this? So I think Wall Street has been onto the ridiculousness of this for quite a while. And remember, the consensus expectations for 2022 rate hikes as recently as September were 1 rate hike. In December, it was 3. Now we're talking about 10. So this has been outrageous for a long time. But I want to give people some hope here. Here's the silver lining. First of all, there are 73 million millennials in America who are forced buyers of stocks for at least the next 30 years, in a 401k, whatever. They have no choice but to buy. Potential returns go up when the market acts this way, okay? So if you know that you're getting a paycheck every 2 weeks and a portion of that is going into mutual funds, this is not hurting you. You can't touch that money anyway. You'll be taxed into the Stone Age. So actually, you're buying stocks lower. It's not better to buy all-time highs. I promise you that. You don't want to take your parents out of their stocks at record prices every day. So number one, this is not bad it's not universally bad for stocks to be down, stocks to be volatile. And then the last thing I want to say very quickly, the Fed has no control over the inflation. They can control the demand situation, and the mechanism by which they do that is affecting financial markets, financial conditions. Financial conditions this year are absolutely horrendous. Absolutely horrendous. And it looks like they're going to start getting worse. But the good news is that starts to work its way through the economy. the wealth effect is a huge driver of how much we're willing to pay for things. So you are going to have inflation roll over. We're not going to compound at 8% inflation month after month after month. So the seeds of the recovery are being planted on days like today when everybody feels a little bit less wealthy and everybody feels a little bit less willing to go out and spend top dollar on X, Y, and Z. So the process is going to work. You're just not guaranteed to enjoy it while that plays out.
Okay guys, just remember that this is a long-term game. It is a marathon, it's not a sprint. I know all of us hate seeing our portfolios red day in and day out, but just remember that no one's ever won a race on lap number 1. So, alright guys, that'll do it for me. Thanks again for watching, and take care everyone. Thanks again everyone for watching Fast Stock Market News. If you enjoyed the video, consider subscribing, commenting, or liking the video. I would greatly appreciate it. My name is Gio, and I'll see you tomorrow, guys. Take care.